All right. I believe you all can hear me. Okay? Can you hear me? All right. Let me know in the comment section um, if you are following us. Okay? Let me know in the comment section if you are following us. Let me know where you're watching from. Where are you watching from? Okay, where are you watching from? Okay, I can see Jute from Pakistan. I can see Just from Mexico. All right. Thank you for joining. For those who are just joining us, do also let us know where you're watching from. You know, from Mexico, from Nigeria, from Ghana, South Africa, wherever you're watching from. Today we'll be, carrying out, an analysis on Euro USD. Uh, you know, two other currency pairs or more, as time permits us. And today we are starting with the Euro USD. Okay, the Euro USD. So first approach, I said when you want to analyze the market, you also want to check what is the current market structure and what levels is the market at present. Okay, so let's look at this. So currently now we want to look at what is the market structure. Starting from using a top-down approach, we are mapping out levels of support and resistance. Okay, I'm mapping out levels of support and levels of resistance. Now, why is these levels very important for us to map out? Why are we mapping out these levels of support and resistance? Okay, we are mapping them out in order to get the demand zone and the supply zone. Okay, now the demand zone and the supply zone are these zones where certain actions takes place. So when we look at the demand zone now, the demand zone is the zone where buyers are willing to buy. Okay, the willingness to buy lies at the demand zone, and at the demand zone is where we call the support level. Okay, because so when price comes to the support level, buyers picks interest and price goes back up. That's the demand zone. Okay, now the supply zone. Okay, the supply zone is the zone where when price has gone up, has increased up to a level, then the supply zone, when price gets to a level and then the sellers, those who have bought earlier, start selling off. Okay, that is the supply zone. So let's identify where these zones are on our chart. Okay, so we say here is the, let's say, the resistance zone. Now also note that the resistance zone is where we call the supply zone. All right, so here, this is the zone that sellers are willing to sell. All right, sellers are willing to sell at this zone. Okay, now the supply zone the support level is also known as the supply zone. I'm sorry, demand zone. Okay, so here price goes up, okay, and price is resisted from going up further, and the price, sellers sell off here at the supply zone. Sellers sell off here and price falls. Price comes to the support zone. Support zone meaning the price, the level where price is being resisted from falling further, and then this level is what we call the demand zone, because when the demand steps in, what happens? It pushes the price up, and so on and so forth. Okay, good. So, and this is very, very important, you know, for us to always look out for. All right. Now that we've been able to establish this level as support and resistance level, okay, now we would now want to look at the lower time frame. Okay, we now want to look at the lower time frame. What is the lower time frame going to say? So when we look at the lower time frame, which is here, good, because definitely the lower time frame gives us a clearer picture of what is currently ongoing within that time frame. The larger time frame gives us a broader scope of what is actually going on, an overview of what is actually going on. The smaller time frames takes us into the current market situation. Okay, as we go from the weekly time frame to the daily time frame to the 4 hours time frame, we are able to see what is currently going on within those smaller time frames. So it keeps us in a clearer perspective to know what market is doing at those smaller time frame within a short time frame. So from what we can see here, we have already been able to establish that this level here is a resistance level, also known as a supply zone, and this level here is a support level, okay, also known as what? The demand zone. All right. Now these are very 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 important zones. Okay, good. So now we can see that price at this level here had broken out of this supply level, okay, support level. So price has broken out from this support level and price broke back into that support level, which makes this breakout a fake breakout. Okay, then price broke out and came back into that supply level again, and now price went up, a reverse pattern again, and we can see how the buy pressure is being seen here. Okay, let's zoom closer so we can spot the buy pressure. Okay, so we can spot the buy pressure here. All right, so here now we can see that the current market situation here is showing so much pressure from the upside and the downside as well. Okay, but we can see that the market in recent weeks from October 2020, okay, September 2022, we've been seeing some buying power coming in on the Euro USD. Okay, some buying power coming in on Euro USD. Yeah, as you can see, some buying power is coming in here, and we can see what price is currently doing here. Okay, there is a buy pressure here which actually pushed price back up, even straight down. Okay, so what are we looking at on this chart? For swing traders, you want to set your buy order here and set your take profit level here and your profit level here. So from this kind of trade now, we want to we can see clearly that price had broken out of the price has broken back into the support level, and we can see so many buying pressure coming in on the support level. Okay, now this buying pressure coming in on the support level has given us a clear chance to enter into this market and hold. Okay, all right, so now let's look at our price entry level. Our price entry level would be around okay, then take profit would be around 1.15151. Then stop loss would be at 1.04928. Okay, our entry level, our take profit level, and our stop loss level. You know, these are what we envisage if you are a swing trader, which means you want to swing over the weeks. Okay, then you are expecting this. So let's look at the lower time frame, like the daily time frame. Let's look at the daily time frame. Okay. Now, why are we looking at this daily time frame? Because we are applying more like a multiple time frame strategy. Multiple time frame strategy. All right. Now, this multiple time frame strategy helps you to compare and contrast, price movements across various time frames. Okay. Now, it helps you to check what price movement across various time frames. It also puts in clarity into your entry levels and your exit level if you are an intraday trader. Okay, you are one that you only trade within a day. Okay, and that's very important. So multiple time frame strategy is very, very important to apply when trading. So when we look at this now, it's giving us some very clear picture that price is looking at testing this region, okay, before pushing back up. Okay, because if you look at it now, this region was the breakout level, right? So price would still want to check the strength of that breakout level. Okay, and that brings the tendency of price coming to test this support level. Okay, when price comes to test the support level and then to confirm if the support level is still solid and strong enough, okay, to check if the support level is still solid and strong enough. Now, if the support level is solid and strong enough, then we are expecting to see price, come lower here, rally a bit, and then go up. Okay, but if it is not strong enough, then we might not see it come down here, then break out and come down to this level. Okay, but definitely price is going to create some consolidation at this level, all right, which will tell the solidity, the strength of that level. All right, so the price coming to that level is to test the strength of that level. All right, okay, so we can see that we are expecting price to come and touch this region, maybe rally a bit, and then hopefully go up, or rally a bit from here and go down. So either of these two is very, very paramount. Now let's look at the 4 hours time frame. Okay, let's look at the 4 hours time frame. Now the 4 hours time frame, like I said, is monitors every price movement in 4 hours. The candlestick monitors every price movement in 4 hours. All right, that is what it does. So it helps us now to create a clear picture. Okay, now you see that the 4 hours time frame now is now giving us a more clearer story into what is currently happening. So you see how price rallied from here, and price was forming a descending triangle at this level. Okay, price was forming a descending triangle at this level, and price finally fell. All right, when price finally fell and price rallied a bit below the support level, price came back and broke into that support level again. You get? So price breaking through it now has now gone up. So price dropped a bit here from what we saw in the weekly time frame. In daily time frame, we saw that price may most likely drop to this level before going back up. Okay, before going back up, or in most cases, or in some cases, if all things being equal, price drops further. Okay, so now that is why it is important that as a trader there is no 100% accurate analysis. All right, so you don't want to I'll better put it as risk too much or get exposed to too much risk. Okay, you don't want to. All right, okay, now let's see what 1 hour time frame is saying. Okay, so let's look at what the 1 hour time frame is saying. After this, I will take some time to explain risk management, because it's what a lot of persons lack. Many persons don't lack the skill to trade, they lack the risk management to actually make profit. Okay, so if you look at this here now, if you look closely on the 1 hour time frame, the last 1 hour, what did you see? A rejection candle. Okay, so one thing you want to do is that you want to monitor price movement within this level. Okay, you want to monitor price movements within this level. When you monitor price movements within this level, when price bobs out of this level, you can use that as your buy metrics. Okay, as your metrics to say, okay, I'm buying. All right, when price pops out of this level, okay, and that's also quite important too. Yes, so if you have any question, drop it in the comment section. I would answer your question. I'm waiting. If you have any question, do well to drop it in the comment section. If you have any question, drop it in the comment section. I would answer your question. I'm waiting. If you have any question, do well to drop it in the comment section. I would answer your question. I'm waiting. If you have any question, drop it in the comment section. I would answer your question. I'm waiting. If you have any question, drop it in the comment section. I would answer your question. I'm waiting. If you have any question, drop it in the comment section. I would answer your question. I'm waiting. If you have any question, drop it in the comment section. I would answer your question. I'm waiting. If you have any question, drop it in the comment section. I would answer your question. I'm waiting. If you have any question, drop it in the comment section. I would answer your question. I'm waiting. If you have any question, drop it in the comment section. I would answer your question. I'm waiting. If you have any question, drop it in the comment section. I would answer your question. I'm waiting. If you have any question, drop it in the comment section. I would answer your question. I'm waiting. If you have any question, drop it in the comment section. I would answer your question. I'm waiting. If you have any question, drop it in the comment se If you have any question, drop it in the comment section. I'm waiting, I'm waiting, I'm waiting, I'm waiting. If you have any question, use the comment section and I would answer you. Yeah, like so you can use any indicator you are comfortable with, but what we are using here is price action. Okay, we look at price action strategy and then we work with that. Yes, so we've already talked about what we are going to do, or what we would look out, what we are looking out for if we are trading this. All right. So we are if you are an intraday trader, okay, and you are looking for opportunity in this market, like I said, you are if you are using the one if you are an intraday trader, then 1 hour time frame should be your friend. So when you look at this 1 hour time frame now, you see how price is reacting within this rectangle. All right, this rectangular box I've drawn here. Okay, now it's important for you to understand that price has rallied within this triangle, right? What I'm going to wait for is that I want price to break out of this triangle to confirm my buy signal. I don't want to just jump in straight to buy. Okay, so I will wait. Once price jumps out of this, then I buy. All right, if price keeps rallying within this box, then I'm not buying. Then if price drops out of this box, okay, then I am selling. All right, so either to buy or sell is not what you can determine immediately on this 1 hour time frame. If you are an intraday trader, okay, you want to trade within the day, then you are looking at waiting to see where price would break out from, either upward or downward. Either ways where price breaks out from. All right, you would make money if you are patient enough for your setup to be confirmed. Any other question? Kindly ask your question. Thank you for that question, Joshua David. Okay, someone is asking a question how to scalp. All right, definitely you can always scalp on any currency pair. Okay, and for scalping, which means you are paying attention to the 30 minutes, 15 minutes, and 5 minutes time frame. Okay, 30 minutes, 15 minutes, 5 minute time frame, 1 minute time frame, 3 minute time frame. Those are your good time frame for scalping. Okay, yes, and definitely scalping is quite risky because of how fast the market is on lower time frames. So if you are looking at the 5 minutes chart, then you want to be very fast. 1 minute chart, you want to be very fast because prices are moving very very fast. Okay, so if you look at the 1 minute time frame, definitely, like, I'm not into scalping, so there is no way I will tell you, okay, this is the best way to scalp. All right. However, if you want to scalp, definitely you want to take multiple time frame analysis very seriously. Now, because you would have to be watching the 15 minutes, you have to be, shuffling through the 15 minutes, the 3 minutes, and the 5 minutes time frame to be able to be sure that the direction at which you are going is actually the right direction. So if we look at this Euro USD on a 15-minute time frame now, when you see this is not even a confirmation that it is a sell. So you can see that price came down here now and went up quickly again. Let me zoom in so that we can see how fast price is moving on these time frames. Watch this now. Watch how price would either go down further or even go up further. You can see how price came down suddenly. So you won't experience this sudden movement on the 4 hours time frame, because price moves slowly and slowly and slowly. But as you can see here now, price is moving faster. You can see how this jumped up. So you have to be very, very careful. So when I look at my 15-minute time frame now and I see, that pressure, it looks like there's a buy pressure coming up here. If this candlestick can close above here, or the candlestick close above here, then I am buying immediately and looking to short on the 1 minute time frame. Okay, so if you say, okay, I'm buying here now and I'm shorting out here, or I'm shorting out here, or I'm shorting out there, depending on my risk appetite. Okay, so you see that this candle is formed in 1 minute. So you look at this one now, it's moving so fast, it's high frequency, at a very high frequency. So you don't want to be trade it if you're not ready for the risk it takes. All right, so you want to use the 15-minute time frame as a monitoring track for your entry level on the 1 minute time frame, 5 minutes time frame, or 2 seconds time frame, whatsoever. Okay. Yes, you can use different time frame. That's what I'm saying. So multiple time frame analysis is you using multiple time frames to run your analysis. All right. Yes, so you can use a higher time frame for your exit level and a lower time frame for your entry level. It all depends on you. Okay, it all depends on you. So if you are going to day trade, okay, you are looking at the 4 hours and daily 4 hours and 1 hours time frame. Daily 4 hours and 1 hours time frame. Those are the 3 time frames you are looking at if you are going to be day trading within the day. This is very, very important. Okay. Yes. Any other question? Any other question, guys? Any other question? So we can trash them now. I'm waiting for your questions. So you can see what the price is doing here. Okay, someone is asking, how do you manage risk properly? Yeah, to manage risk properly, you want to also be conscious of your leverage. Okay, you want to be conscious of your lot size. Okay, I want to make sure that your capital or your margin deposit is not an emergency money. Okay, because the moment you say, okay, let me use the money, one essential fund, to quickly make more money in the market, is a lie. All right, that anxiety of losing the money, or that, you know, that pressure of using the money to make more money would make you actually lose the money. All right. So number one, you want to trade with a money you know that would not affect you, you know, if you lose it. Two, you also want to trade, you know, with a leverage that is, you know, that aligns with your deposit. So if you are using a $1,000 now, you want to be mindful of your leverage. Okay, so say 50, 100 is fair enough. All right, but the moment you are using 500, 1,000, it's already overboard. Then you're looking at your lot size. You don't want to be trading a $100 account and you're using a 0.1 lot size, or you're trading a $1,000 account and you're using a 0.5 or 9 or something large, you know, lot size. All right, you want to be very meticulous about your lot size, about your leverage, and also about your invested capital, your margin deposit. Okay. Someone said, what is the best strategy to use? Yeah, like there is no best strategy, okay? But there is a a skillfulness that comes with consistency of, you know, test running several strategies and develop and getting to know which one works for you and sticking with it. The moment you are able to know which one works for you and you stick with it, you make more money. All right, you are able to trade comfortably. You are able to you are more comfortable with your trades. Okay, so the best strategy is the strategy that you've developed over time, having understood how, you know, how having understood the market and how you choose to respond to the market. Okay, that's the best strategy. Okay, and then you set up a rule and you follow it. So for psychology, all right, you want to take notes of your trade, and you don't want to over leverage or use larger lot size that would make your mind almost cut off because, oh, you've placed a trade that you feel it is too risky, and it becomes too risky for you. Okay, and when that trade becomes too risky for you, your mind is always there. Your mind is never settled. Okay, you don't want to be in that position. All right, any other question? Any other question? I want to answer as many of our questions today. Okay, today, so we can always yes, any more question? Any more question? So if you look at the daily time frame here, look at what the daily time frame is showing us here. It's telling us that there are sell pressures coming in at this current resistance zone that price has gone into currently. There are sell pressures. Okay, there are sell pressures. As you can see here, we can see that there are sell pressures here. You spot them. If you agree with me that there are sell pressures here, how did you spot those sell pressure? How did you know that there are sell pressures here? So can somebody share with me in the comment section? I'm looking at the comment section now. I want to know, how did you know that there is a sell pressure? How did you know that there is a sell pressure? Okay, how did you know that there is a sell pressure? I'm waiting. Drop it in the comment section. How did you know that there is a sell pressure? If you have 1,000, then you don't want to trade anything above 0.0, 0.05, 0.02, 0.01. Okay, you can stick with 0.02 for a long time to build up the account. 0.02, it's not 0.2, 0.02. All right, to build up the account. Okay, yeah, just said the weeks. Yes, same thing with Avi said a week from resistance. Great, so you can see that we are having weeks. Okay, these weeks signify rejection. Okay, so this is telling us that what price would most likely fall before picking up again. Okay, if you use a $100 account, just stick with 0.01. Just stick with 0.01. Just stick with 0.01. You know, you can't be using a $100 account and you are risking 0.02 on a single trade. No. So if you stick with 0.01, you know, in as much as you want to use 0.02, if you stick with 0.01 and split the trade, so you know that okay, I'm using 0.01 here and I'm using 0.01 here, so there is a more likelihood that okay, this trade might go well, why this trade might not. Okay, so that's it. You don't, if you're using a $100 account, you shouldn't be using a 0.02 you know, lot size on a single trade. Yes, so this place here we can see is not able, is able to sustain the resistance. Price has been resisted here, so we are seeing weeks, a sign of rejection, so indicating that most likely price will fall to this level before picking up again. Okay, this is on the daily time frame. You see that, you see why it's important to do multiple time frame analysis. So you are sure, you get to be sure, okay, of what you are doing. Okay, any other question, I want to answer your question today. I want to answer your questions today. So yeah, I like the fact that you are able to tell me why this is a sell. Okay, makes so much sense. Shows that we are following. Yeah, like one position is okay. So imagine you are trading with $100 and you are opening 5 positions. You won't last long. You won't last long in the game. You see, one interesting thing I will tell you is that it's not about how much you make, okay? It's about how long you last in business. When you treat trading as business, you would last longer. The moment you're not treating trading as a business, you would not last longer. You would always blow your account over and over and over again. You get? You always blow your account over and over again. Okay, we have few minutes. Let's jump on the gold market. Let's see what opportunities that we can spot on the gold market. So on the daily time frame, let's map out levels of support and resistance. What do you expect on the gold? Even looking at gold clearly, what can you spot? What can you spot on gold? What can you spot on gold? Let me know in the comment section. What are the things that you can spot on gold? What direction would gold most likely go? Up or down? Bullish or bearish? Okay, from what you can see on gold, where is gold going next? Where is gold going next? Where is gold going next? Also, to us that a sell is happening. Why do you think this sell will continue? Oh yeah, someone said bearish flag has been spotted. Why do you think, another opinion, why do you think this sell off would continue? I'm waiting for your opinion. I'm waiting. Fantastic. All weeks are pushing down. Exactly. This candle consumes last 3 days. So we can see that for the past 3 days to 4 days, there have been consistent bearish pressure. All right, and the likelihood of a continuous fall in price is very high from what we can see. Okay, and I appreciate the fact that we have gotten value from this session, and we are also learning quite fast. One important thing I would want you to do right now is to click on the subscribe button and also tap on the notification bell so that you can be the first person to be aware of any of our future webinars. All right, this is very important. This webinar is brought to you by OctaFX to educate you and also to onboard you into the journey into financial freedom. Knowledge is currency. So when you know what to do, you are able to make money. It says to know is to be free. More importantly, as you trade with OctaFX, you get value of the education and you apply it into your trades. I love to see you in every of our sessions. These sessions hold every Thursday, 6 p.m. From now, in our next week we will also be here, same time, same place, and don't forget to click on the subscribe button. Okay, so here we are now on gold. Gold is a sell-off. Okay, gold is a sell-off. All right, great. So thank you very much, guys. Love to see you in our next session.